Okay, welcome everyone to the Future of Wealth and Finance. Thank you so much for joining us today. My name is Yiling and I'm going to be the host for today's session. I'm Yiling and I am the Singapore Country Lead for Innovation and Partnerships at 500 Startups. Today's session is going to be split into three parts. So the first part, I'm just going to introduce 500 Startups a little bit, and we have prepared something on the thesis that we have around the future of finance and wealth. We'll go through that. The second part, I'm going to introduce our three special speakers today who will share with you more about their predictions of the future of finance and wealth. And then we are going to leave about 15 minutes at the end to do a little bit of brainstorming and jamming. So I'm hoping that all of you will actually stay on with us for that session too. So a little bit about 500 Startups. Our mission is to uplift people and economies through entrepreneurship. And we've been fortunate to see our vision come to life more than ever now during these times of change. We are ranked as the most active early stage investor in the world, according to PitchBook. We've invested in over 2,400 portfolio companies in 78 countries. And we work with more than 5,000 founders in our network. And we actually have more than 340 expert mentors around the world. This part is always a little bit wonky, but just to share with you a little bit in terms of our reach of startups, we've invested in startups all over AI, robotics, digital health, fintech, and wealth, of course, also contributes a lot of our portfolio. And we've realized that startups, regardless of sector or industry, experience similar pains and challenges. And that's why at 500 Startups, we really focus on building ecosystems that goes beyond just providing investments. First and foremost, we help set strategy. So we work with corporates as well as government agencies to create direction, alignment, and commitment around the vision for the ecosystem, because we understand what needs to be activated or created to make the ecosystem thrive. We also set platforms as well, and using our community of networks and networks of mentors, experts, as well as founders are able to pull all of them together and connect them with other stakeholders in the ecosystem. So thirdly, education. Some of you might know that we're famous for our VC Unlock program, where we train aspiring angel investors and aspiring VCs, including corporate VC funds as well. And of course, in terms of startup program, we run programs from all maturity of a startup, from incubation stage to accelerator stage to even market access stage as well. Corporates, all of you here, many of you here are corporates actually. And for corporates itself, corporates invest, acquire, partner, or buy products and services from startups. And so we work with a lot of them to understand the thesis around innovation and how best they can partner with other startups or actually undertake more entrepreneurship and venture building efforts. And finally, we also work with government agencies in terms of startup programs and helping them build startup ecosystems in their local cities or their country. And of course, we invest. And we also help match startup founders with other investors as well. So very quickly, we've got experience in running programs in over 15 countries. We've run over 60 programs and working with over 340 mentors, including in Singapore, Malaysia, as well as Indonesia. And we also work with corporate innovators for Insight Series, startup sourcing, POC program, entrepreneurship, and also help them establish CVCs too. So now we're down to a little bit more exciting part about the future of finance and wealth. Today, we're going to focus on two parts because the breadth of financial services offering is so broad. The focus of this talk will be on two priorities that consumers and small business owners are most concerned with. Number one, how to grow money while avoiding steep middleman fees, so wealth management. And secondly, how to access capital easily and affordably, so credit and lending. And there are three key trends that we see today. Firstly, mass affluent customers who are discerning about the quality and value will be attracted to the evidence that fees are the best predictor of return. So we're talking about investment and wealth management here. And they seek to put their wealth to work with innovative entrants like robo-advisors and digitalized investment platforms with low fees. I'm not going to elaborate so much because we have the perfect spokesperson for this later. Secondly, really capturing appetite. So earlier on in the first one, we talked about mass affluent, capturing the mass affluent market. The second part is really capturing appetite for alternative investments. So cultural and religious beliefs actually opens up opportunities for new or alternative focus of investments. In fact, one of our 500 startups backed startup, Hello Gold, has found its playing field in wealth management within the intersections of gold investment, Islamic finance, and blockchain. So the startup's goal-focused products work to its advantage in customer acquisition because its target market, which is mainly the underserved and the underbanked, was already aware of the inherent investment qualities of gold. And so instead, the challenges that they face is a little bit different. It's in convincing customers that gold investment through a digital platform is actually way more accessible and affordable than buying a jewelry store. And lastly, so we went from mass affluent to the underbanked and the underserved, right? And now we're talking about the unserved market in terms of lending as well. So Julo, for example, is a startup in Indonesia that provides P2P lending. The unsecured loans that's provided for them has multiple use cases for the underbanked and the unbanked, core of which are the provision of working capital for small business owners. And so P2B lending business, while seemingly unprofitable for banks, appear to be attractive for nimbler fintechs. Now, so conclusion of the trends now, right? Firstly, provision of superior transparency and fees are challenging traditional financial institutions in their wealth management play. Secondly, fintech can unlock dormant demand for alternative wealth management products by focusing on building trust and credibility. Thirdly, startups have uncovered opportunities in non-metropolitan populations, which is a segment that lending incumbents had deemed too costly to participate in. But all that is just happening now. What about the future? We are here to talk about the future after all. And so now I actually like to take everyone's attention to this scenario planning for the future. We took two key trends and we tried to create an intersection of them. So the first key trend is really interaction, right? When we talk about fintech and wealth management, people always talk about interaction. Is it going to be more automated or is it going to be remaining as human-centered? Secondly, treatment of data. Will we actually see open sharing of data through open banking platforms, for example, or will data still remain guarded and closed? Right now here, I would actually want to get everyone to just do the poll. We're going to pop up the poll. I want to hear your views and see your results, right? Which scenario would you count on? Not today, but in 2030. In a world where we are talking about everything being automated, digital first, and where data is entirely open, we probably see that everyone's family office. Why we're talking about hyper. I'll go through that a little bit later, but let's pause here and see your outcomes. Okay, I'm still getting a few more votes in. Let's wait for people to vote a little bit more. And I am seeing most people choose the wealth marketplace and the standard digital bank, which is interesting because it's the complete opposite. Okay, let's see. I'm going to move on to the next part. And let's see what that means. So first and foremost, if we believe that in the top right-hand side quadrant, that personalization and automation will explode, what does that mean? The wealth of data made available by open banking, along with the increasing customer trust, will enable automated, instant, highly granular personalization across a range of different product types. And in fact, this trend has already been started by startups like Plum, who use open banking to build highly personalized saving plans for customers. But increasingly, personalization will be expected across every element of financial services. And what we're going to be expecting to see is really, the Netflixing of advice, where new wealth management clients will want to access advice in a very Netflix-style model. So it's data-driven, it's hyper-personalized, it's continuous, and who knows, potentially by subscription as well. And this all counts on us using customer data to continuously and deeply understand preferences and develop hyper-personalized recommendation. Now, in the second part of it, in the second scenario, we actually look at bank account being a commodity. Current accounts have long become an entry point for bank and is viewed as a way to build loyalty to sell products. But with the likes of Google actually launching their account services, We are now entering the era where bank account is just a commodity. So what do you need to differentiate? It's all about ensuring that your platform as a bank offers additional benefits to customers in terms of convenience, product range, or personalized approach. There you go, the word personalization again. The third future prediction that we have is actually, and I find this actually pretty fascinating, right? So this third prediction goes around refocus goal-based advice with tracking. So some people call it the fitness, not finance, but the fitness, because what happens when in fitness, right? In fitness, you're always tracking not in terms of a long-term basis, but on a daily basis. So in the future, will we actually see a focus on investments and saving being based on goal-based advice where clients will actively pursue and track bite-sized goals? So for example, clients will be thinking about saving for 3 college credits a month. And so we're looking at very granular goal tracking, which will span their life cycle across investment, protection, education, retirement, and also broader wellness as well. So in a nutshell, we're thinking about fitness tracking like kind of finance, breaking down large goals, subsequent daily monitoring and tracking, and the importance of validation and feedback so that you can really quickly tweak the way that you're approaching investments. And lastly, the other conundrum, right? All the time, exclusive versus everyone, at scale or remain exclusive. For wealth management firms, several at scale firms will probably serve everyone, but the rest will remain exclusive to ultra high net worth clients. They'll have to coexist in their own niche. So direct firms that fail to crack the high net worth segment and struggle to differentiate upward, will stay there. And then you'll also have firms who will fail to integrate downward. They can't go mass market, and hence they will have to remain completely upmarket. And I think the funny thing here is that, maybe down the road, only the richest 1% of mankind will be able to afford a human relationship manager. So this was just some of the fun fintech as well as wealth management tech future that we were envisioning. But I'm by no means an expert, and hence I'm super excited today that we have these 3 amazing speakers who will be joining us to share their views about the future of finance and wealth. So if I could just get Ratin, Ju, as well as Gary, thank you for switching on your video. So first up, we have Ratin, who is the co-founder and CEO of Spenny. We have Ju, who is the CTO of Endow Us. And we have Gary, who is the former CEO of WeCash Vietnam. I'm going to hand it over to Ratin now, who will just quickly share with us what Spenny is all about.
Awesome. Hi, guys. Thank you so much, everyone, for joining and taking out the time today afternoon. What I'm going to do is also, Eiling, thank you so much for that wonderful introduction. What I'm going to do is just share my screen and quickly introduce you to the concept of Spenny, and then we can take it forward from there. Right. So the idea for Spenny is very simple. We started with a basic premise that in a country like India, which is a billion people, less than 3% of these people actually invest their money or save their money in any sort of financial instrument. And this is as opposed to 55% average in US and even 17% in China. So the 3%, less than 3% is so little that is where we were motivated to start. Now, if you look at the reason why this happened, is because it is very difficult, it is complicated, it required a lot of time and resources for someone to start investing in India. So we set out with the simplest mission possible. We wanted to create the easiest and the fastest way to invest. And the way we started doing this was by taking an Acorns-like concept and delivering it in India, which is that every time a user does any sort of digital transaction, we round that up to the nearest 10 rupees in India, and we invest it for them automatically into a diversified portfolio. So they don't require any time, they don't require any knowledge. They don't even have to make decision as to how much to put and when to put. So here's how it works. Let's say you go out and buy food, or you book a cab, or you do any sort of Amazon transaction, or even an e-commerce transaction, swipe your card, etc. When you do any of these sources, transactions on any of the sources, we take the amount, we round it up to the nearest 10 rupees, and we invest it automatically. Now, our mission as a company is very simple. We want to take that 3% of Indians who are investing today and take that number to over 15%, which is a massive opportunity in India itself. And this is what we want to probably unfold in the next 5 years. So that's what Spenny is about.
Thank you so much, Ratin.
Thank you.
Okay. And next up, we are going to pass the mic to, can I get Ju to share a bit more about Endowus? I think I'll play the video first. Do you want me to do that, Ju?
Yes, please.
Okay.
Yes, please.
I'll play the video and I'll hand it over to you.
Luck has little to do with your investment success, so don't expect us ever to say good luck. I'm Sam. I've been in the industry 25 years, and I was the Chief Investment Officer and CEO of Morgan Stanley Investment Management in Asia. I had a lot of resources investing as an institution, but when I tried to invest my own money, it was a real problem. I would walk into a bank and they would offer me these products that were completely unsuitable for me. I knew there were better ways to invest, but I couldn't access those investment products. So my partners and I asked the question, how can we do this better for all of us? Lower cost, tailored advice, better products. Endowus is about improving the human experience of money. We stand on the shoulders of giants. Our advice is based on Nobel Prize-winning research on modern portfolio theory by Harry Markowitz, who famously said that diversification is the only free lunch in town. Cost in the form of high fees is the single biggest drag on your returns. The average investor is paying so much in fees right now that the chances of success are very, very low. We can do better. Based on your goals and risk appetite, Endowus will provide the best portfolio for you. We do this transparently at the industry's lowest levels of cost, with no sales charges and no commissions, in order to give you the best chances of success. Better advice, better products, lower costs. These are the solid building blocks to financial success, not luck.
Thanks, Siling, for sharing that. Hi, everyone. I'm Drew. Just quickly about myself. So I was born in Korea, grew up in New Zealand and Australia, and I worked in Australia before coming to Singapore. I worked in various financial institutions, from including UBS Investment Bank, Macquarie Bank, and Goldman Sachs. Before joining Endowus, I worked for first robo-advisor, retail robo-advisor in Singapore, Stashaway. And I've been working for Endowus as a Chief Technology Officer for past 2.5 years. And Endowus is, as you have seen in the video, is a Singapore-based fintech company that enables people to invest. And we allow people to invest their CPF, SRS, and cash savings. Today, we are the first and only digital advisor for CPF and SRS and cash savings. And currently, we are about 36 people team, growing really quickly. So far, we are completely self-funded. And our team is made up of very diverse people with different backgrounds. We have a couple of people who joined us from large financial institutions, including Morgan Stanley, Goldman Sachs, and Blackstone Group. And we also have people who join us from startups and tech companies like ByteDance, Grab, Carousel, and Kakao. And in the next 5 years, we want to continue to grow as the digital wealth advisor that can provide the holistic digital wealth advice, aggregating all of your funding source and different types of accounts like CPF and SRS.
Thank you so much, Drew. I would love to hear more about robo-advisory later and how you do that. You use that to empower, citizens. But over to you, Gary, if you could just share a little bit about yourself and your background.
Hi, good afternoon, everybody. So my name is Gary, and no, I don't have slides to share today because I've since left WeCash. So I used to work in WeCash for 3 years, from 2018 till this year. WeCash is actually a relatively big fintech unicorn based in Beijing, and what we do is we focus on lending to the underbanked or the subprime market, and for this the past 2.5 years, what we were expanding in Indonesia and Vietnam. So I was leading up Vietnam, and I built up the Vietnam business, lending to almost like dealing with about like 2,000 to 3,000 applications for loans almost every day at one point. So that's basically my experience for the past 3 years, and I'm happy to share more about lending later on. Thank you.
Perfect. Okay, now I think the first question that I have to ask all of you is this. Earlier on, we shared a little bit about, let me just get that page right. But earlier on, we shared a little bit about the different scenarios that could be happening. Wanted to get your thoughts on what do you think is the most likely outcome, say 10 years from now. Maybe Ratin, you want to go first?
Yeah, sure. Happy to do that. So this is particularly interesting because I was watching the polls, and my particular view did not sort of align with the polls. And I'm going to say that for me, I think the most favorable outcome in the next few years is going to be the everyone's family office. So it's going to be automated but open. And I'm going to give you reasons why. So first, I believe definitely that we are going towards a direction where data is going to be more and more open in terms of operability. Data is not going to be in closed silos anymore. There will be inter-sharing and interoperability of data so much. And second, it's going to be everyone's going to want instant automated access to finance, sort of financial advice in terms of wealth management and all of those things. At the same time, make it personalized. So this is one part of it. The second part of it, however, is that ultimately it's everyone's money that we're talking about, which means trust is always, always, always an issue. Therefore, I don't believe that the wealth marketplace is probably the next step, because wealth marketplace means that you are the person who's giving you the advice is probably anyone. And I don't think that's necessarily true, or that might be the case. So I believe that the financial services would be democratized for everyone, but at the same time, the trust has to remain. So that's why I'm going to go with automated but open. So everyone's family office.
Awesome. Ju, what about you?
Yeah, so I really agree with what Ratin shared just now, and I was actually quite surprised to see the poll results that the everyone's family office was the third popular vote. So I think it will be the everyone's family office, and in fact, I think we're already heading that direction where more data is openly shared between the consumers and the digital platforms, and the interactions are increasingly automated, of course. And as I said, this is already happening in the market. There are many players out there, including Endoas, that provide this kind of personalized digital wealth management solutions to the mass affluent. And I think two major factors that enable this trend is definitely the data that is more available and open, as Ratin mentioned, and the automation driven by the technology. For instance, Endoas can already download a lot of customer personal data that we can use to provide personalized wealth advice through the MyInfo service that was designed by the Singapore government. So data is not only open, but it's centralized and organized by the government. And through MyInfo, as long as the customer give us the consent to do so, we can know their occupation, salary, employment, tax history, and even their pension fund balance as well. And these are really the key information for our analytical engine to personalize the customer's wealth advice. And what I'm saying is they're already available to us, and they're being used by us every day. Our data shows that most of our customers who have access to MyInfo, they do allow us to access their MyInfo data to ease the onboarding process. And also they expect that by providing the access to MyInfo, they're expecting they can get more sophisticated advice from us. So one thing I really agree with Ratin and what was shared earlier about the mass affluent is that they tend to be much more digitally savvy, and they like to try new product and new platforms. So I do feel that customers are not that afraid of trying digital wealth platforms like us, as long as we have this legitimate licenses from MAS and all that. And there are already many players in Singapore robot advisory market, as I mentioned, including Endoas, Stashaway, Saif, and AutoWealth. And we all have been operating for a few years already, and none of us have blown up with our customers. So as a group of robo-advisors, we are successfully gaining the trust from the general public and we are proving to the world that we can actually manage people's wealth safely and much more cost effectively compared to their traditional banks. And these platforms are only going to get more sophisticated and more automated going forward. And a lot of the tasks that were done manually by human operators in the traditional financial institution, like KYC, AML, portfolio optimization, construction trading, and even the trade settlement, all of these tasks can be almost fully automated already. And actually at Endoas, we managed to automate most of these tasks in our platform already. So in summary, yes, with this trend, it will get much easier for customers to get hyper-personalized financial advice on their mobile phones. And platform will automatically monitor their assets, tracking the progress of their financial goals, giving them financial advice on a regular basis. And in my view, basically, this is effectively same thing as having their own family office CIO working for them.
Drew, I must say you're doing an amazing job pitching for Endowas. I like that you are reassuring everyone that you haven't blown up and you have that trust factor. But what I especially like is what you said about expectations, that the mass affluent are going to expect personalization because they're providing open data. Gary, want to hear your thoughts, especially coming from the other side, the credit lending side.
For me, I think I'm going with Standard Digital Bank, and I feel that that's really going to be a reality. Like, thanks to COVID today, we're already masters of doing everything via virtual interfaces, right? And furthermore, I think in the world today, the developing regions are really what's going to contribute the mass numbers of people towards the online world. Cheap smartphones are today infiltrating all these regions. There are massive numbers of underbanked people, unbanked people, and this new mobile internet connection to the world on a smartphone is really allowing these people to really interact with financial and even other commercial services like never before, right? So these interactions will result in massive data collection. Now, like I think Rathin and Julie have said, a lot of these data will then become centralized and open and shared. But I see this data as mostly data regarding surrounding regulated areas or closer to identity of people. Now, but the vast majority of data in the world today, and we are talking about maybe data that we may not even consider important, like for example, what groceries are you buying or where are you traveling to on a daily basis. Now, this data will remain closed and private because these are data collected by various commercial parties in their transactions with these users. And while today we may not see this data as being valuable, going forward in the data economy, these what we view as useless data today is going to be useful data tomorrow in all kinds of relationships. And this commercial parties these data owners are most likely to be willing to trade, sell, or utilize this data to further monetize their relationship with their customers. So the way to target all these new to bank or new to, well, I guess new to bank is probably the most reasonable term, to new to bank masses is most effectively through standardization of sort of simple financial products that they need. And in my view, that's the first financial product that all these people need is unsecured cash loans because they have never been able to access credit. And you need to deliver, and you need to have this kind of simple standardized products delivered via a virtual interface, delivered and processed automatically through AI mobile apps and maybe e-wallets for those in areas without banks.
Interesting. Thanks, Gary, for sharing that view and that different perspective, I think, as to what data constitutes or comprise of and what data can be open versus closed, and open to who and closed to who. Now, want to take this one step further, right? We talked a lot about the now, and I think a lot of the things that we discussed is really informed by your experiences as well. But if we were to really cast our eyes on 10 years down the road, 15 years down the road even, what is your most radical prediction of human needs? Again, human needs. So let's talk less about technology, but more about human needs in terms of finance and wealth management and credit, right? In 2030. Drew, maybe I can get you to go first.
Yeah, sure. So, by no means I'm an expert in this area, but I'll just share my personal view on this. I believe that it will be the retirement planning that will be in most demand in 2030. Actually, there are some people arguing that retirement crisis is more immediate and more danger than climate change. So, so traditional retirement planning, I don't think it's doing so well. So in US, New York Times reported that 75% of Americans have less than 30K in their retirement accounts, and projected that about 49% of middle-class workers will retire poor or near poor. And the similar report indicates that 4 out of 5 workers in America will fail to meet their financial need in retirement. And also in Asia, in South Korea, as society continues to age due to low birth rate, number of people who can work is going down, while the number of elderly people who need support is going up. So more than 20% of the population of South Korea will be aged over 65 by 2026. What's more interesting is that in Korea, currently contribution from 5 adults to the national pension scheme support 1 elderly person as of now. But in 50 years, 1 adult must support 1 elderly person. That's 1 to 1. And when this pension scheme in Korea was first introduced in 1988, it was designed without any consideration of low birth rate and aging population. So evidences like this is overwhelming that something is wrong with the traditional retirement planning, and it's an old world model that needs major change. So the biggest problem in my view is that the average individuals doesn't have the skills and knowledge required to successfully plan and execute their retirement. And for one to be successful, you have to be right in so many things. First of all, you need to voluntarily save significant portion of your income with discipline. And you need to develop the investment expertise to implement asset allocation and investment decisions. And then you have to precisely calculate the inflation rate for the remaining lifetime. And then you have to accurately plan when you will end the work. And lastly, you have to be able to predict the future by knowing in advance when you and your spouse will die, so that you also know how long your savings must last. And I really think that no one can successfully do do all of this. Too many factors are completely out of control. And even if you do have some skill set, it's just going to be very, very difficult to get them all right. And the price of being wrong in retirement planning is just extremely high. And just now I was talking about US and South Korea, where both countries have one of the best managed pension schemes in the world. But that is, of course, including Singapore with CPF. But there are more countries out there whose people are not covered by any pension scheme at all. And actually, there's a report saying that about 90% of the world working age population is not covered by any pension scheme at all. In Thailand, only 1 worker in 5 belongs to the state pension scheme. And in many developing countries, the majority of people work in informal sector or rural regions don't get any pensions of any kind. So global aging, backed by the 2 long-term trends, which are falling birth rate and rising lifespans, will soon be putting a lot of pressure on government budgets and national economies. So I think definitely retirement planning will become one of the most in-demand areas in finance and wealth in the future. It's just that people don't see this as an immediate problem. So yeah, I think it will be the retirement planning.
I agree. Thanks for sharing that. And I echo that. I think I spoke to a Provident Fund recently as well. And yes, the number is indeed staggering as to how low the percentage is in terms of, number of citizens that are covered by the pension scheme and have enough in their accounts in order to make it work. Gary, what are your thoughts? What is your future prediction in terms of lending?
So I think we'll be getting credit not just from banks, but from literally and almost every vendor we purchase from in our daily lives. Currently, our need for credit, be it cash loans or purchase financing, or even bigger ticket ones like mortgages, are all met by banks or other financial institutions, right? You buy a hotel stay on Agoda or groceries from NTUC, and maybe a whole lot of stuff from Lazada or 1111. But ultimately, it's still your bank whose credit card you're using that gives you an installment or pay later plan on that purchase. But I see in 10 years' time, every company will be in some way a digital bank, right? They'll be able to assess customer credit and to grant credit in the form of a pay later sort of program or installment plan directly to their customers. Now, this idea may not be very new, because today the biggest companies are trying to do this. Like, take for example, Grab. They have a travel history, where you're going to and from, your frequency, and was using that to sort of extend a pay later program. But now they have even more data, right? They have shopping transactions, food delivery, insurance, and investments to make an even more thorough credit assessment on you. Now, we may say, yeah, that's because they're huge, they're getting a financial license and everything. But the truth is, you don't really even need that much data to extend credit, even though it obviously can be helpful. Now, in 10 years, most companies will have learned how to harness this data to use AI and to either in-house or through outsourced platforms to sort of leverage the knowledge of you. And I'm saying even from your bakeries to the smallest retail shops, right? Because perhaps by then there'll be open data platforms with sufficient metadata to even perform a simple credit assessment on you. And this means that these shops may not be paying a transaction fee to the credit card companies for you to use credit, but maybe even earning a fee from credit investors to extend this credit to you. So I think that's sort of my wild guess on where I see this is going.
Gary, I'm going to come to that a little bit later. So I want to ask you a question on alternative credit assessment. But let's close it up with Ratin. What's your big prediction for 2030?
All right. So I'm no Nostradamus, but I'm going to say I have 3 predictions. First, I think wealth management and banking is going to be as common as a mobile service or a cellular connection. So every citizen or every person, just like they have a mobile phone and a cellular connection, they're going to have wealth management and banking in 10 years from now. So that's my first prediction. Second, I believe investment is going to be like an e-commerce store. We're going to build like the new generation investment apps are going to be like e-commerce stores. You just go to an investment app. You select you pick out a few ETFs or stocks that you like, compare it with other products, look at the reviews of that, and then just swipe to buy. It's going to be like e-commerce. And the third thing is that I think there's going to be a Google Maps sort of situation for money. Now hear me out. How this works is basically it's going to be, because there's so much level of personalization, but also automation. How it's going to work is that just like you know your current destination in Google Maps, and you know where you want to go, so you enter your as in you know your current location, you enter that, and then you enter your destination, and then Google Maps charts a route for you. That's going to happen for money, where you're going to put in your current financial situation, or basically there will be systems well equipped to just figure out your existing financial situation, and then figure out what your goal should be, and then chart out a path from here to there, and then sort of do all the steps necessary in terms of what should be the adequate savings or investment routes. So those are my top 3 predictions. I think the third one, I'm really betting on the third one for sure.
Nice. I am really excited at seeing that Google Maps that will tell you everything without you even needing to think. Just
Exactly.
needing to put in inputs. Here I am, where I want to get to. Nice. Okay. Gary, you alluded to this earlier in both your answers, in fact, right? One, in terms of the data of everyday lives that's being collected. And secondly, really credit being available by every vendor that you shop with. So a lot of fintechs have tried to target the underbanked or unbanked, and big banks find it unprofitable. Startups are said to be nimble enough to make it work. Wanted to find out from you, your insights, right? Is that true? And how accurate are these alternative credit assessment methods?
I think good question. Now, I think traditionally banks have always accessed credit based on traditional credit history and credit scores. But in reality, below what banks consider as creditworthy are billions of people worldwide who are actually bankable. I mean, the microfinance industry has proven this, by a lot. And not only do these people repay loans, they actually do so with relatively low default rates and high interest rates as well. So, I mean, lending is the world's second oldest profession. And I think they definitely didn't have credit histories back a long time ago, right? So the most basic credit assessment method is the data I get from lending you $1 maybe 5 times. And for these 5 times, you repay it on time with interest. And hence, on the basis of that, I agree now to lend you $150, right? So every other piece of data that I get over and above that is really a bonus and maybe increases accuracy to a certain extent. But ultimately, this is all I need. So it can be argued that you could really build a lending business based on any sort of data. your purchase history on Lazada, your transport history on Grab, your weekly grocery run, all these are data that I can use. And the most important thing to make lending to the underbanked and the unbanked a profitable business is really automation. I mean, the onboarding of customers, the application process, the credit assessment, or even the disbursement and collection needs to be automated as close as possible to 100%, and arguably even sometimes to the detriment of credit assessment. Now, if I get 2 more defaults, but I save money on processing 100 people, I mean, ultimately that's still a cost saving overall. And the most important thing is really then not just automation, but making identity available, or checking of identity available. So we also need a strong, reliable, open identity digital platform to do this effectively. But that's another story. Thanks.
Thanks, Gary. Okay, last question for today. So Ju, if you were given $50 million in funding, I can be up to 100 as well, no problem, to build something in the finance and wealth space, what would you build? 2 things to consider. Number 1, it can't be Endowus. Number 2, the rationale has to be that it's an important enabler of the industry that you think needs more attention or resources in order to make some of your predictions come true, or that you think that there's going to be huge potential in it in the next 10 years. What would you build?
Sure. So I hope my partners at Endowus don't see this, but yeah, I think I mean, this is really exciting to think about. Like someone just giving me 50 million, 100 million, and just ask me to build some whatever I want, whatever I think is going to be big. I'll be definitely building a one-stop digital wealth platform that allows people to holistically manage their wealth and financial goals and trade different assets using different brokers and different funding source. So like many individuals these days have generally more than one investment account, such as cash account, which is taxable, and tax-free accounts like CPF and SRS. And also youngsters tend to invest not only into traditional asset classes like stock and ETF, but it's actually increasingly common for them to invest in P2P products and also the cryptocurrencies. It's big. So when these customers' different portfolio across multiple advisors and multiple brokers are managed in isolation, it is extremely difficult to establish strategic financial goals. Because these advisors are only given a partial picture of your total wealth. We call this problem a quarantine portfolio. So your portfolios are quarantined to each other and managed in isolation. And isolating your portfolios and not managing them in aggregated manner is actually quite dangerous, especially for retirement planning, which I mentioned earlier as a big problem. Let's say, for example, if you go to one advisor with your cash and advisor gives you a portfolio that is 50-50 on bond and equity, thinking that you can tolerate, moderate level of risk. And then you go to another advisor for your CPF because the first advisor cannot support CPF investing. The second advisor scores you to a moderate growth portfolio as well, and then putting you into 80% equity, 20% bond. And then you end up arriving with 70% equity and 30% bond as a result. But if you're a 50-year-old man who hopes to retire in 5 years, this allocation is extremely dangerous and it can harm your retirement goal. So ultimately, I believe the digital advisor, wealth advisor, should be able to manage your wealth holistically and should be able to calculate and capture different type of assets under one platform. And building this kind of platform takes enormous engineering efforts and will require a lot of business development work and will require different types of regulatory licenses, which are quite expensive. So yeah, I'll be putting 50 million in building this kind of one-stop digital wealth platform where you can manage and also trade different type of assets.
Don't forget to let people track on a daily basis, okay, like fitness.
Of course.
I really like that.
Yes.
Ratin, what about you? What will you build?
Okay, so if I were to me, I'm going to say that most people are interested enough to have basic thoughts and basic opinions about where to invest and so on and so forth, but they won't have the detailed knowledge and they wouldn't want to do the time and research, and willing to make a good judgment call. So I think a great platform would be which takes away the heavy work of this, but just lets the user play with their opinions and thoughts. So I'm going to marry the two. Here's how it's going to come about. So imagine you have a platform. Imagine you have a certain thought that, hey, listen, COVID vaccines are being built by pharma companies. So I believe that inherently pharma companies stocks or sector is going to go up in the next few months. So this is all I know. Now, can you provide me with a platform where I can just directly invest? This is the only thought I have, and you create the pharma stocks for me. You create the ETFs for me. You pick out the best, the industries out of that, and I just click. It's one click button, and I just invest into that. That's it. I'm done. Like that kind of situation where I just have a thought. Like I read in news that, hey, US elections. This is what has happened in the US elections. I believe that because of this, there'll be this trend change, and that's it. And now you provide all the legwork for that. I just want to click once and then I want to invest like that. I think that would be fun because a lot of people want like gamified investment solutions. And if I have 50 or $100 million, I mean, first I'm going to make a proper plan and come back to you and pitch so that you actually give me that. And then we're going to build this. So yeah.
I like that. Basically, I'm just going to tell you one thought I have. You tell me buy, don't buy what, when. That's it. I don't care about anything else. Fun.
Exactly.
Yeah, and very easy to use for the masses. So thank you so much to Ju, Ratin, and Gary for sharing that. Now we're going to actually break everyone out into 3 breakout rooms. And I'm going to pop the link to our Jamboard here. So you've heard from our speakers today about their predictions, right? We'd like everyone to actually just participate in this as well and go into the Jamboard, and you can put the sticky notes in there as to what your wish list of solutions is. It could be today, it could be down the road. If you're one of those who really have no clue about retirement and feel that you need something around that, put your ideas in there as well. We're going to split around to 3 breakout rooms, and then you can discuss while also putting your ideas into the Jamboard. And I'll see everyone back here in 10 minutes. Okay, thank you everyone once again for spending your afternoon, your lunchtime with us. If all of you who are in the same time zone, I hope you have time to go grab lunch after this. Really appreciate you all joining into the discussion today. And thank you once again to our 3 speakers, Ju, Ratin, as well as Gary, for spending time and sharing your vision of the future with us. My name is Yiling Lim from 500 Startups. And if any one of you wants to reach out to me, my number is right here up on the screen. And I've also included a form in the chat. If you would like to connect with any of the speakers, you can feel free to fill up the form here. Lastly, one last request. I'm going to launch a poll. Would love to hear your views about what you thought of today's session. And if you have any feedback of how we can make it better, let us know as well. One real feedback could be don't make it during lunchtime. Thank you everyone once again for joining us, and have a great rest of the day.
Thank you so much, Yiling.
Thank you so much, Yiling, for having us.
Thanks, Ju. Thanks, Ratin.
Thanks, everybody.